Aliens landed on the Earth tomorrow, and you had to pick one person to represent humanity. Would it be Joe Biden, Donald Trump, Xi Jinping, or Elon Musk? Surprise, surprise, everyone on Twitter, at least, I'm still really not in the habit of saying X, would prefer our alien leader, Elon Musk. But that's not what today's episode is about. Today's episode is about a rapidly changing world, a world in which I believe will have a tremendous amount of opportunity. But right now, that opportunity seems masked behind one of the worst economic outlooks, one of the worst economic sentiments we've ever seen. Quinnipiac poll finds that 71% of America think poorly of the nation's economy. Over half, 51%, think the economy is getting worse, and 28% think it's unchanged. Even though the US economy is going strong, quote unquote, under Biden, Americans don't believe it. 2/3 of the respondents, 68%, report it's difficult to be happy about positive economic news when they feel financially squeezed each month. 69% of Republicans and 68% of Democrats, evenly split across party lines. And even more so, check this out. In August, the unemployment rate was 3.8%, close to a 50-year low. But the poll found that 51% wrongly believed that unemployment is nearing a 50-year high, rather than those who actually believe it's low, 49%. So what could explain this? Because we just heard Jerome Powell talking super tough about inflation and economic outlooks. But the reality is Americans don't feel like the economy is doing well. And that's because the way the economy is measured is a bunch of smoke and mirrors. And what people really care about, what affects them, is the cost of gasoline, food, energy, in general, the little things that you have to buy each month to have a life, to live your life. And of course, the cost of rent, which is spiraling out of control. These are the things that Americans actually care about that make them feel as though the economy is doing well. When prices are high compared to what they make, they feel like the economy is doing poorly, even if the overall GDP or whatever, a number that honestly doesn't affect Americans directly very much, is still growing. So what can be done about this? Well, in the end, it's extremely hard to run against a weak economy. So what we know is that the government will be doing everything that they can to stimulate the economy coming into an election, which is of course the year that we're about to enter into. Everybody loves election years. You have repetitive and nonstop fear-mongering of people against their neighbors, turning brother against brother until we push everyone to the brink of civil war. What's not to love? Well, the reality is that election years might be some of the darkest moments in American history, but they also offer some amazing news for financial markets, as they tend to be some of the best for financial markets. That's right, believe it or not, but presidents like to stay in office, and staying in office is very hard to do if the economy is not doing well. So it's certainly in the current administration's best interest to stimulate the economy in whatever ways they can. The magic trick here is not creating a ton of inflation while doing so, and hoping that they can earn another term in office. So let's talk one more time about why I'm actually quite bullish. You see, I'm quite bullish about the setup of this economy, as there's a general widespread negative opinion of the economy. Everyone believes the macro looks terrible and is set up for a massive slide lower, which usually means, of course, it's not going to go there because everyone is never right. But you can see tremendous amount of negative sentiment. Meanwhile, something that we don't talk about a ton on this channel is AI, which is making it easier and easier to disrupt industries and will eventually create economic growth. And the way that AI is working right now is a race to the bottom. And this is because AI firms are effectively setting it up so that AI is becoming completely free, subsidized by big tech. And they're doing this to open up these models, to open up the AI for people to build stuff on top of, to make it super cheap to build stuff on top of. So short term, the only people who are going to win from this are the people providing the compute power. But long term, tons of people will be able to experiment with AI and build new businesses. And this stuff is advancing super fast. We're seeing tons of articles like this. Effectively, translation industry is considered totally dead, according to leaders in that industry. That makes sense because it's so easy to translate things with AI. And we're seeing a ton of lawsuits from things like the Authors Guild, which of course are alleging misuse of copyrighted material. This is because AI is learning from this copyrighted material, and then you can just say, hey, write me something in the style of George R.R. Martin, right? Boom. All of a sudden you have Lord of the Rings #8 with nothing more than pressing a few buttons. And that, my friends, is a threat to a ton of existing industries. It's also an opportunity for new businesses to emerge. And that's where we get the secret sauce, the exotic spice of tech-fueled economic expansion. I like this tweet by Bob Lucas where he says, I'd like to think that after an induced slowdown, remember this is induced by the Federal Reserve hiking rates super aggressively into Q1 2024, that we set the scene for one terrific roaring 20s, broad bull market, driven by massive AI tech productivity gains. And that's because every business will be able to integrate AI and benefit from it, reducing the prices for the end user eventually, which will of course make the consumers feel better about the prices, but also increasing productivity gains and ultimately share prices in the markets. I believe AI will lead to asset prices booming as well as consumer prices shrinking in the long term. We just are in this trough of disillusionment right now. But of course, there's no denying that there will be a ton more joblessness created by this dynamic. That is an unfortunate reality, which is why I also believe that government stimulus will be a huge part of the AI future. There will just be too many people that need help that it will become far too popular to have social programs to help people who have been disaffected by AI, who have been disaffected by this new modern economy. Chief of the Pudgy Penguin tribe, Luca Netz, chimes in here. He says, kids are ChatGPTing their way through high school and college. That degree is becoming less and less impactful by the year. An era where degrees hold little merit unless you're a doctor or lawyer is upon us. Be prepared. I would even go so far as to say lawyer is being heavily challenged because that's pretty much just reading and writing. And a lot of the paperwork can be handled with AI starting very soon. I don't think the doctor profession is going to go away anytime soon, but it's actually shocking what these knowledge-based AIs are able to do. And once we involve maybe robotics and sensors where an AI could actually do some of the readings, do some of the testing on your body with some in-home sensors, well, that really opens up the question as to when you'd actually need to go into the doctor and how many times you'd have to do that versus today. That will change the landscape of modern medicine. And now we open up an even bigger question, which is what happens to student debt if the college degrees that have been one of the biggest industries in the history of the American economy start to become useless. The class actions, the actual real recourse against a system that has not been able to produce the outcome that it has inherently promised, getting a job. If those jobs don't exist, or if the college degree doesn't help you get one, well, the popular path to canceling student debt might be there. And who does that affect? The banks. And of course, the banks will eventually get bailed out. The path from where we are in AI to actually seeing a government stimulus program for a massive amount of people, while also seeing the economy expand, is very plausible. In fact, it's right on the table. It's staring you right in the face. I know what you're saying. Oh, look at Jerome Powell. He just said they're going to keep the interest rates high for super long. They're just going to keep them anchored right there. Well, look at this. Is that really the case? Because what we see here is that the Fed funds rate continues to climb until we get the red unemployment number spiking up. Look at the red on the chart here on the bottom and look at how it correlates to that blue line at the top. As soon as we get a spike in unemployment, rates get cut right down to zero. Unemployment spikes up, rates to zero. Unemployment spikes up, rates to zero. And it happens pretty darn quickly. And so the question is, will this be totally different than the times in the past where we've had recessions preceded by tons of rate hikes, unemployment spikes, and then rates get cut down to zero? Well, who knows? We know that some existing presidential candidates on the other side of the aisle, not from the existing administration, but Republicans, they have proposed that they would cut rates right down if they were hired and they would replace Jerome Powell with someone who would do that. So things can change very rapidly, even if the current Federal Reserve is not inclined to do so. In fact, we all know that the Fed is fairly politicized at this point and that they're probably taking explicit or implicit cues from Washington itself. And so to be clear, I believe we are on the verge of so many changes. A Bitcoin ETF is nigh. It's happening. We don't know exactly when, but within the next 12 months or so, it's almost a guarantee. We're about 12 months out from a presidential election. We've just had one of the worst and most bloodied, longest bear markets ever for crypto. And quite frankly, the sentiment around crypto, around the economy is rock bottom. People believe it's going to get a lot worse, which is why I believe there will be potentially one more big break where we'll see housing collapse or something sort of normalize, and then we can resume growth in the economy. That's at least my hope, my outlook. How am I trading this? The same as I have been, which is that I have plenty of cash yielding in treasury bonds. I have plenty of stable coins ready to deploy into the market as I see opportunities, and I'm just gradually DCAing in. I have what's called a double barbell strategy, which I'll make a full video on, but essentially it's weighted heavily into cash, and then I skip almost everything else, and then I have a ton of weighting into Bitcoin and crypto. And within my Bitcoin and crypto portfolio, I have it double barbelled again with most of my stuff in Bitcoin and Ethereum. And then I have a chunk set aside for stuff that could go absolutely astronomically up 1000x, a million X, whatever you want to say, or it could go to zero. But because I have so much weighted in stuff that I know is going to grow long term, or I believe strongly is going to grow long term, like Bitcoin and Ethereum, it makes me feel fine sleeping at night. So that's my double barbell. I'll have a full video on that. Let me know in the comment section if you want a full video on that. Of course, I'm very bullish on gaming as the main application for cryptocurrencies in the next bull run. It's just the consumer application that makes sense for digital economies, at least today. Maybe tomorrow there will be others. But to me, the game looks really good coming into 2024. But also just knowing this is the moment of lowest sentiment and potential black swan-y territory. We don't know when it's going to happen. As soon as that Bitcoin ETF gets approved, as soon as we reach the next halving, as we're coming into these major structural changes in an election year, I can't help but be very excited about the prospects for Bitcoin, crypto, or really the entire economy in a new AI-driven future where businesses are going to be saving more and people are going to need more and more help from the economy. There is a real path for an expanding economy, price stability, if not prices dropping, as a real return to the economic conditions that are super favorable for risk assets. Again, I'm a permanent optimist here. That's just how I operate, and it's how I've been able to make money in this market is by staying optimistic and staying engaged during the tough times, which is of course when all of the money is made. I think the next 6 to 12 months here are the real moment of opportunity as we get closer and closer to good times, I believe, and we get further and further from bad prices. I'm EllioTrades. If you guys enjoy this, check out this video. It's even better than the one you just watched. As always, I thank you for watching, and I'll see you very soon on the next episode.